Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about National Vision Holdings Inc. quarterly report. National Vision Holdings, Inc. operates as an optical retailer in the United States, offering a wide range of products and services through its various subsidiaries. Some of the key businesses and services provided by the company include eyeglasses and contact lenses, optical accessory products, eye exams at stores such as Plus America's Best, Plus Eyeglass World, Plus Vista Optical, Plus Fred Meyer, Plus Vista Optical Military, Plus Discount Contacts, Plus Walmart Vision Center Health Maintenance Organization, Services Optometric Services. National Vision Holdings, Inc.'s stock price has skyrocketed by 101.85% in the past year due to a series of positive financial results and strategic operational updates. Key events contributing to this surge include stronger than expected fourth quarter 2024 financial results, exceeding EPS and revenue forecasts. First quarter 2025 earnings that surpassed analyst expectations with raised full-year guidance. Accelerated growth in second quarter 2025 financial results with increased full-year revenue guidance. A comprehensive store fleet review, resulting in the closure of underperforming stores and conversion of Eyeglass World stores to America's Best. These positive developments have boosted investor confidence, driving the stock price to a 52-week high of $29.59. Despite a recent decline due to concerns over future growth prospects, the overall performance reflects the cumulative impact of these strategic operational improvements and financial successes. The primary drivers of revenue growth or decline can be summarized into three main categories: sales performance, operational efficiency, and external factors. Revenue growth is primarily driven by a 7.5% increase in net product sales and a 6.3% increase in net services and planned sales. Additionally, owned and host net revenue has seen comparable store sales growth, new store openings, and pricing and product mix initiatives contributing to its success. Contact lens sales have also experienced growth. On the other hand, revenue decline is driven by decreases in non-cash adjustments and increases in trade receivables, other assets, and inventory. These changes are primarily due to increased cloud-based software investments and product mix initiatives. External factors such as seasonality, new store openings and closings, holidays, global market uncertainty, inflation, and changes in consumer spending patterns also have a neutral or uncertain impact on revenue growth. Net income and profit margins experience significant improvement. The financial summary reveals a notable turnaround in the company's net income and profit margins. In Q3 2025, net income surged to $3,372, a significant increase from the -$8,468 loss in Q3 2024. Year-to-date, YTD 2025 also saw a substantial improvement, with net income reaching $26,283 compared to just $92 in YTD 2024. Profit margins have also seen a remarkable increase. The operating income margin rose to 56.2% in Q3 2025 from -1.9% in Q3 2024, while the net income margin improved to 0.69% from -1.88%. These improvements can be attributed to several factors, including a decrease in tariffs, inflation, and wage rate pressure, which had previously negatively impacted net income. Additionally, the effective tax rate decreased to 33.1% in 2025 from 49.6% in 2024, contributing to the improved financial performance. The company is indeed generating positive operating cash flow. The financial summary explicitly states this, and the data on page 11 and page 39 of the report confirm it. Specifically, for the 9 months ended September 27, 2025, the net cash provided by operating activities was $133,134, a significant increase from $103,367 in 2024. This indicates that the company is successfully generating sufficient cash to cover its operational expenses and investments, resulting in a positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. A notable development is the full repayment of the $84.8 million outstanding principal balance of the 2025 notes, as mentioned on page 39. Additionally, an increase in market rates by just 1% would result in a substantial $2.4 million hike in annual interest expense, highlighting the potential for significant changes in interest expenses. The company's financial performance varied across different segments in the recent period. The Americas Best and other segments stood out as strong performers, with 8.1% and 10.1% net revenue growth respectively. On the other hand, several segments underperformed. The Best Eyeglass segment saw a decline of 0.9%, while the World Military segment experienced a drop of 0.6%. The Fred Meyer segment was hit hardest, with a significant decline of 7.3% in comparable store sales growth. Additionally, the Best Eyeglass World and Fred Meyer segments also reported negative growth rates of -2.3% and -5.3% respectively. Management is optimistic about the company's outlook, emphasizing its mission to make quality eye care and eyewear accessible to all Americans. To achieve this goal, they are expanding their target demographic through new pricing architecture and optimizing cost structure to drive long-term shareholder value. Key strategies include opening 32 new stores in fiscal year 2025, investing capital in existing operations, and leveraging optometrist-related costs to improve profitability. Management is also preparing for potential macroeconomic uncertainties by monitoring trade restrictions, tariffs, inflation, and other factors. The company's primary focus is on driving long-term value through strategic initiatives that improve margins, reduce operating expenses, and enhance the overall store experience. With sufficient liquidity to fund working capital requirements and debt payments, management is confident in their ability to execute this successful strategy. Concerns about inventory buildup or supply chain disruption are indeed present due to various factors affecting global trade. Tariffs and trade restrictions imposed on Chinese imports have created uncertainty, while investigations into national security concerns may lead to further disruptions. Retaliatory tariffs from other countries add to the complexity, making it challenging for businesses to predict costs and profitability. As a result, supply chain stability is at risk, potentially leading to inventory buildup and future disruptions. That concludes the financial summary for National Vision Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.